Okay, folks, welcome to this week's Fife Property Update. This is the property market from the 30th of July to the 5th of August yesterday. This is a look right across the Fife property market itself. We typically look at the number of transactions coming on, the number of properties coming on for sale, right across Fife by regional basis for anybody who doesn't know this. And this gives us good indication about what's coming on in each area. For example, Cooper, St Andrews, East Neuk, Levenmouth, Kirkcaldy, Glenrothes and Dunfermline area. These are the areas we break it down to regionally, and then we compare them against what's actually selling in terms of numbers in the month as well. This is right across all the estate agents, so we get a good idea about where the property market is in comparison to supply and demand. It also gives you a good indication about if you're a buyer, if you're a seller, if you should be selling, or you should be buying, and what you should be offering and what you should be actually accepting potentially. And if your house is still on the market right now and it's been on for a wee while longer longer than usual, don't fret, don't fear. We'll tell you about that as well and what you should be doing and how you should be approaching it. I'm going to cover as well at the end of this the UK property statistics. This is about the health of the UK property market overall. Now, this is really important. Why do I say it's really important? Because there's a lot of media hype out there. For example, the Nationwide has announced this week that property prices are actually dropping significantly. And in actual fact, that's just their data, which is very limited in comparison to what the UK market in its entirety is, because it's only the nationwide customers that takes into account. But the information we're getting ourselves from is right across all the agents in the UK, and also we get the information on from the land registry itself. In other words, this is all the returns sent in by every single solicitor when a property is actually sold and actually registered and on the actual title on the register itself. So the land registry information is probably the key information to actually assess the health of the housing market in comparison to the number of properties sold in comparison to the number of properties bought as well. So let's just quickly jump onto some main figures here, right across Fife. This is the weekly ones so far. This is actually quite encouraging in a weekly view to see this. So we can see right across there in the Cooper market, actually 7 properties came on, but 12 actually sold in that week. Wait till you see the month for July. It's like, wow. It's like, I never expected that. We're all thinking, wait a minute, the market's declining. And that's what the impression is. But the July figures for Fife do not show that at all. East Neuk, 1 versus 3. In other words, 1 property listed and 3 properties actually sold in that last week. St Andrews, 7 versus 13. St Andrews, there seems to be a huge influx into St Andrews now in terms of people wanting to buy actually in the St Andrews area. In other words, in St Andrews central location. I have a feeling that's a lot to do with the restriction in supply for student accommodation. Levenmouth, 7 actually came on and 15 sold. Dunfermline 56 and 42 sold. Glenrothes 14, 12 sold. Kirkcaldy 29 and 16 sold. Overall, 121 properties came onto the market right across Fife last week, and 113 properties actually sold. That is a good, healthy number. And I would say if this was boom times, that is that comparison. The difference here is the price of the property is actually selling is actually a lot lower than what it was last year, because affordability of mortgages up to a certain level only allows people to do that. So there's a certain amount of buying power now, which is restricted in the Fife market. So the lower end, I'd say the lower end, it's really up to about 250, 300,000, selling really well. Now, we're testament to that because we put one on social media this week in the Anstruther area, and that's actually had an offer on it and it's been accepted. It's just to go over the line, and it's been sold from social media. It's sold before it even got to any website. So that's a testament to the demand that's still out there for the right types of properties. And we're still seeing a lot of activity around properties that are actually listed at the higher price point on the social media channels from interest from people. But it's about converting it and making sure they're in a position to actually proceed, and making sure they've got the funding in place in order to move forward. This is where A lot of people actually fall down now because they're not making sure, because interest rates are moving up and mortgage availability is a bit different than it was a year ago. A lot of people actually not making sure that they're still in a position to actually proceed, and the budget they thought they had before is actually still intact. They've still got that budget right now to buy, because that's probably moved down quite significantly, maybe by about 40% in comparison to what it was last year when interest rates were at a record low. However, you can still get really good mortgages out there at the 5.25 level on fixed rate deals for 5 years. Even though base rates are sitting now at 5.25. Base rates have actually been increased this week by a quarter of a point. Now, this was obviously the Bank of England's decision to still maintain that they're trying to curb inflation. But what you see is actually the number of people that voted for it has actually got less than it was the month before. So the Bank of England's Monetary Policy Committee has actually been a bit more lenient, but the government has actually expressed a concern to the bank and all the banks to say that they don't want to see any banks immediately taking any action if anybody falls into any arrears with their mortgages. They want to see them to be helpful, and they want also to see them to be, and I think they'll be more creative, by the way. I think they'll move terms out. In other words, if you're on a 25-year deal just now, they'll probably will tell you what, we could move to a 35-year deal, if that's okay with you. That'll bring your monthly payments down by 20%, so your cash flow will be in a better position. That could be the perfect deal for some people. They'll be offering mortgage holidays as well. So bear that in mind. Ask your bank about that, because they'll not volunteer that. If you're struggling a wee bit in terms of cash flow and stuff like that, ask your bank if there's a mortgage holiday or if there's an interest-only option for a short period of time, just to alleviate your cash flow position in a short-term basis in order to get you over a wee hurdle, potentially. But then you have to take the proper advice from the bank and also possibly from a mortgage broker as well. But if you have your mortgage in place, just speak to your bank direct or speak to your lender direct. They'll be very, very helpful. I know they will be. They were encouraged to do that after the credit crunch, and I've mentioned the credit crunch, but there's no bearing in this, what's happening now, or what is maybe supposedly happening. Again, supposedly, I don't see any evidence to this effect yet, but there seems to be some sort of thing in the media supposedly happening right now, but I don't see that. And I'll tell you about that, because I've got a good show I did during the week, an actual blog and vlog to that effect. So let's look at the monthly stats. This is actually quite interesting as well. So let's roll it on to the monthly stats for July. Look at this. 531 properties are actually listed. 467 actually sold. 88% of the stock that's come on is actually sold. Now, in a real healthy market, it's anything above 81% actually sold. Is a really healthy market. So this shows you it's 88% of what's actually come on. So that's an extremely healthy market in comparison. Why is that? And why is that difference? Why do I say a 19% difference? In other words, what comes on, if less is sold, then surely it should be like for like. Well, some of them are actually people selling up because they're moving completely, or moving into rent accommodation. Some are deceased estates, so they'll never ever buy again, these people. So that's why it's about 19% of the market actually don't go in to buy again for various reasons, as I just said. Okay, so you can see right across the regions. Now, this is actually quite important. In the monthly stats, we see in these numbers. Now, I've adjusted them. Why have I adjusted them? I've adjusted them for Dunfermline or for Glenrothes. In the Dunfermline area, there was 15 properties actually came on with a builder. So that 223, in essence, would normally be 238. But because it doesn't come up as a sold figure from the builder, in these numbers and the data we're looking at, we'll have to strip that out and adjust that for that. Hence the reason why we've got ADJ up there. So we're comparing like for like on a normal basis. So there's an influx into the market of properties actually come on from new build developers, and in these not in these figures, but they would be in these figures normally, of round about 30 to 40 properties right across in there. But still, even with the 40 properties in there, it would still make it really desirable in terms of the health. Divided by 571, we're sitting at 82% still. If you actually put these 40 properties back into that starting figure of 531, we'll still be sitting at 82%. And I've just told you 81% is a really healthy market. So even with that out, it actually looks very, very favourable, and even with that in. So you can see right across in the Cooper area, 119%. In other words, there's more demand in the month of July than was actually supply. East Neuk, 87%, 23 on and 20 sold. St Andrews, 122%. Again, I think that's coming back to the student market and driving that forward. Levenmouth, 86%, 58 came on, 50 sold. Healthy market. Dunfermline, 223 versus 190. Again, the new build was in there, so hence the reason why the new build was stripped out. But there's a wee bit more oversupply in the market in Dunfermline and in Glenrothes, and that's purely down to the new properties that are actually being built. But still, overall, healthy market right throughout Fife. Very encouraging. Okay, number of properties actually coming on is actually driving this as well. Let me just explain, and also the number of properties actually up for sale, in other words, stock. I'm going to talk about the UK stock at the end of this, so hang tight for that. But in terms of the Fife stock right now, there's just under 900 properties on the market for sale, according to Zoopla. So 900 properties available for sale throughout Fife. Pre-pandemic, there was 1,200 properties. In other words, in the 2019, there's about 1,200 properties available for sale throughout Fife. Same amount of people, same amount of buying power, more or less, but there was more properties available, significantly more, about another third actually than the 900. So it just tells me straight away it's what's encouraging this market is the lack of supply and keeping it propped up. So as long as the lack of supply continues to be there at this point in time, this market will still continue to remain healthy. There's 1.8 million people coming out of mortgages, fixed rate deals this year, right throughout the UK. That's going to be a wee bit of a challenge for some people, but everybody's been stress tested at the 6 and 8% level. If you're getting 5-year fixed rate deals right now at 5.25, you've been stress tested prior to this, so you should be able to afford it. It's just possibly your disposable income has been rerouted somewhere else temporarily now, and you'll have to then rein it in and actually divert that to your mortgage itself in order to encourage it. Hence the reason why a lot of lenders will probably give a wee bit of leeway this 6-month holiday period on an interest-only basis, or maybe 6-month holiday mortgage payments, in order for everybody to get themselves sorted out to that effect. 25% of the UK market, remember as well, remains unencumbered debt on the properties. In other words, there's no mortgage on these properties at all. So 25% of the market. Also, there's a huge amount of equity built up in the properties, in everybody's property, because all the prices going up over all the years. In the last 3 years, in Fife alone, property prices have gone up by about 30%. So there's a huge amount of equity in there for the banks to rest back on and be still remain liquid. So even though property prices dropped maybe by about 10%, they would still be 20% up. So they'll still have a huge amount of equity to remain liquid in terms of the banks. So they will continue to be able to continue funding and lending and financing property purchases. That's probably the most important thing to the driving the health of the property market, along with the restriction supply and an unprecedented time in comparison to where we were before. UK unemployment levels are still at a record low. So there's still a huge amount of people earning money out there at record amounts. British Airways, for example, has just given all their staff for the next 18 months a 13% pay rise. Inflation busting at this point in time, because inflation's come down slightly to, I think, it's about 7.8, around about 8%. So it's still inflation busting in comparison to where it is right now. So these are all signs that tell me that things are okay as they stand. Again, as I say, the increase in the interest rate will affect the middle to the top end of the market, which is round about the 300 to the 600,000, 700,000, 800,000 pound price point. That's where it will affect it. If you've got money coming in from outside, where people can buy at bigger levels because they've sold somewhere in Glasgow, Edinburgh, London, for example. Biggest hitters to our website is the London area, and the Edinburgh area as well is the second biggest hitter to our website. Then these people could see the price points in the Fife area for what's available on offer as very, very attractive in terms of what they can get where they are. After all, the average property price in London is around about 550,000. The average property price in Fife is a third of that at 170,000 almost. So it just shows you the difference. And yet the average salary is almost similar in terms of levels right throughout the UK. So you get better buying power in the Fife market in comparison to outside of this area. One of the best and most affordable areas to actually buy. I know when we're talking about St Andrews, it's a different context, but this is an average, remember. 50% is going to be above, 50% is going to be lower, but 50% is going to be lower than 170,000 at this point in time. So that's going to make a lot of houses. So there's 170,000 houses in the Fife area. There's 370,000 people on average. So it just shows you that there's a lot of houses still available for sale at affordable prices. You're picking up 3 and 4 bedroom houses round about the 100 to 150,000 in the Dunfermline market, in the Glenrothes market, and in the Leven market. So it's still very, very affordable and easy to stay in areas outside of there. If you can't afford to buy in your area, consider just moving maybe slightly down the road to another area. It's actually a better affordable price. And then all you do is you need to just commute in when you need to. And it's easy access because Fife's easy access to everywhere. You can nip over to St Andrews from the Leven area, for example, in 25 minutes. You can nip over, you can be in the middle of Cooper, or you could be in the middle of Glenrothes, and you could get easy access to either side of Fife, to any beach or anywhere you want to go is an easy reach of the Fife area if you're in central. So that's why it makes Fife a very, very attractive proposition for most people outside of the area, which will maintain our market and keep it healthy. And that's the key here, healthy, more than anything. House prices, yes, they are relevant. If you're at the top end of the market right now and you're thinking, oh, I'm struggling to sell at this point in time, consider this. The person that you're maybe selling, and you're possibly most people at the top end of the market look to sell to downgrade. Um, so the person that you're about to downgrade to is probably in a similar position. If you're up at the 600,000 or 700,000 mark, and you're probably downgrading to around about the 450,000 potentially, or maybe the 500,000, then they're still in the same boat because that's over the 250,000 itself. Therefore, they would probably be more amenable to a price realignment, as well as you being more amenable to a price realignment as well. So it's kind of like for like. You're trading like for like. If you're doing that, you're not actually losing out as such. Okay, let's talk about some of the shows we did this week. Quickly, Buy-to-Let Booster, 5 ways to raise the return on your rental homes. Buy-to-let market's still very, very lucrative. Rents are still continuing to rise. New rents getting set right now are no limitations, no restrictions on them. They are market-led. Existing rents with a tenant in the property, yes, they can only restrict by increasing by 3 and up to 6% if you can show a significant increase in your costs as a landlord. Other than that, all the new properties that go up for rent are put at market rents. Therefore, it's very, very affordable market now, still for investment purposes. So Richard and I talked about this yesterday, about 5 ways to raise your return in rental homes and also make sure your tenants looked after and everything like that. And so it's a good show. Podcast is on there, articles on there. For anybody that just wants a wee bit insight into what we're about to talk about on these shows, just read the article, and if you think, oh, they're all valid points to me, I go in detail about how it's relevant and how it affected me and what I did in order to really or sort any of these issues I talked about in that blog itself. So that's what we do every single time. With all these blogs, we put the article on, we discuss the article in full detail over an hour. It's put in a podcast, it's put on a show like this as well in a video format. And it's up to people whether they want to spend 4 minutes reading the article or they want to invest a wee bit more time in listening to the podcast or actually watching the show itself. It's based on personal experience. I've been in property investment for 30 years now, been running our letting agency for about 15 years now. So we've got quite a bit of track record in it, I would say. Probably one of the best in the country, actually. The most experienced in the country, more than likely. The one everybody needs to know about is I spoke about this during the week, and it was literally just about 20 minutes I jumped on to do this. And it was 14 reasons not to fear house price drops in Fife. And even in the UK. And I talked about the strength of the job market, the 2023 different to 2008, the long game for Fife home ownership. I talked about inflation's good news for homeowners and landlords and explained why. Positive implications of the is for going up market, So there's positive implications for going up market, because if you're trading up and house prices are dropping, the drop in the higher price is greater than your price. Therefore, you're actually benefiting when the price drops. Persistent housing shortage will drive that. I just spoke about that. Fife, the rental dynamics as well for this market in terms of where it stands. Anticipating mortgage rate reductions, because it will happen at some point in time. Expect moderate declines. Potential for renovation costs dropping as well with this. The property market loop of recovery. House price drops will only affect house price drops. Listen, house price drops only affect you if you're actually selling. They make no difference otherwise. So if a house price market drops and you're continuing to stay in your house for the next 4 or 5 years, it makes no difference where you are right now. More than likely, you've probably built a lot of equity up over the years because you've been in it for quite a while. So the drop is insignificant in comparison to anything, because you're not actually physically selling. And if you do, then it's like for like, because the other person's house has dropped as well. Actual value of home ownership, I talked about in that 14 reasons, and the rarity of prolonged price declines. I actually went into detail about that, what that meant. Again, if you want to watch that show, read the article, please feel free to do that. It is a really good read for people that are really want to know the background and the knowledge and the expertise that goes behind this. That's why we've driven that forward. So these are the two. Now let me talk about. I'm just gathering my notes here. What's coming to market, what's sold so far, and that'll give you a good indication of what to look out for. There's still, as I said before, we've just sold one from social media there right now before it even got to our website. So the market is still good for certain types of properties, and it was an offer the seller can't refuse. So people are still paying offers the sellers can't refuse. That is a lot, by the way. So just one this week for us personally. So it's no surprise. Craig Noon Grove and Cellardyke. It took 6 weeks. This was on 6 weeks. It took. It was a 4-bedroom detached house. It was on at 350,000. It's away. 4-bedroom detached house, 350,000. It is away. It was an owner upsizing, looking to be closer to their family. Gone. 6 weeks, 350,000. There's a demand. Okay, what's coming soon? We're going to talk about the UK price index in a minute, but what's coming soon with us? So watch out for these ones, because these ones have actually been signed up and they're ready to come to market in the next week. I'll be putting a few of them on myself. Some have actually come on as pre-portals already. So watch out for these ones. Crescent Road and London Links. This is a 3-bedroom ground floor flat. Ground floor flats are actually really desirable for people downsizing. Stairs are not manageable anymore, therefore a ground floor flat is perfect for people that can't manage the stairs. They often sell a bigger house, a lot bigger. It has more value in it and releases all that money to buy a lower value ground floor apartment and put their own stamp on it. So they often are cash buyers moving forward, and they are prepared sometimes to pay just that wee bit more than an upper flat, purely for the fact that it's ground floor and it suits their purposes. Remember, there's still a restriction in supply coming on. So that's what's keeping that market really good. Scooney Hill Road in St Andrews, 3-bedroom terraced house will be coming on. A drill side in Anstruther. That was my pre-portal I did a couple of days ago. 3-bedroom end terraced house. That was a beautiful house. If you'd seen these beautiful worktops, that kitchen open plan to the lounge and the dining room, it's to die for. Another one, Craignoon Grove and Cellardyke, a 4-bedroom detached house will be coming on. Southcroft Dyke End Cottage series. If you saw that one, I did that pre-portal on Friday, a couple of days ago. It's got real good interest already. If you're looking for a 2-bedroom end terrace cottage, ready to go, a beautiful back garden, Citizen Sunday all day long, and it's elevated plot, 2 miles outside Cooper, 7 miles outside the home of golf, St Andrews. This could be the one for you. One of the most historic villages in the whole of Scotland series. It is probably the oldest Highland Games it celebrates. Since 1314, since the people of Ceres came back from the Battle of Bannockburn, the men and women, Robert the Bruce decreed that they would enjoy a Highland Games every single year on the last Saturday of June every single year. And for over 700 years, they've been doing that every single year. The only things that have stopped them was the war and COVID. That was the only things that stopped them. They've been celebrating it and having a Highland Games every single year since. It's probably the oldest Highland Games in the world. It is a fantastic event, but it shows you the in-depth history that series has and how much it means to the Fife community and how important it is to the Fife community area. Very, very idyllic village to live in. Wonderful place it will make for someone to watch. Watch out for that one. The pre-portal's on right now, and it will be coming to the website. And we've got pre-portals on right now. We've got coming soon's coming on right now, and these are ones you think I might be interested in this. Give us a message us now and tell us what one you're interested in, because you could potentially get you could make the seller an offer they can't refuse at this point in time if you're in a position to proceed, and you could get this before it goes to any website. Some of these properties are actually selling on some occasions before they even get to this stage. They're actually selling before they even got on a social media channel. That's what happens because you're registered with estate agents. So it's important you register and don't rely on the internet telling you now what's available, because some of them are actually gone before then. Braehead and St Mona's 2-bedroom flat. Wait till you see the views from this top window. Wow, it's amazing. I've been in it and I'll be launching it this week. 2-bedroom flat in Braehead and St Mona's. It's a beautiful property. Green Lawn and Kirkcaldy, 1-bedroom ground floor flat again, as I'm saying. Hill Street and Cooper, a 2-bedroom first floor flat as well. That's an upper. It's coming out to market as well. So watch out for these ones. All really good price points. Perfect. Probably some of them actually might be perfect first-time buyer opportunities. Some of them actually sound like perfect downsizer opportunities. Some of them perfect family homes. Okay, so what is completed? Let me talk about this. Completed. He's handed over. In other words, money's been paid, contracts have exchanged, people have moved in, keys handed over, job done. I can tell you the prices and what they went for now with these properties. So the Cribs in St Mona's 4-bedroom terraced house, it actually sold in 2 weeks when we listed it, and it sold for 9% over the home report value, which represented another £45,000 for the seller. I'll say that again, £45,000 for the seller. Do you think they were happy with what we did for them? Yes, I would say so. Okay, the Old Stables house in North Wynd. This was actually sold, a 2-bedroom mid-terrace house, sold in 3 weeks. It was on at 160,000. It sold for 6% over the home report value, which represented another 10,000 over the home report value. Fairfield Road in Collinsborough. This is a 2-bedroom cottage. It sold in 1 day. Fairfield Road in Collinsborough, 2-bedroom cottage, sold in 1 day, 11% over the home report value, represented another £20,000 to the seller. Does this sound like a boom market? Because it does. When I've been talking about the figures for July and I'm talking about what's going over the line now, it kind of sounds like it. Tornaveen, High Street in Falkland. It's away, 6-bedroom end terraced Victorian villa. If you saw the launch for that, that was amazing. The sculptures and the design on the front of the property, which actually it was a grade B listed property for that reason, and it's maintained like that. It's absolutely beautiful. And its interior is beautiful as well. Well, it is sold, but it actually sold for the home report value, 550,000. So it shows you at the higher price points, they're going round about the home report value, whereas the lower price points, they're actually going a wee bit significantly over. So the lower price points have got a wee bit of catching up to do in terms of price point and getting to the right alignment for the value for what they're offering. So the lower value ones, it's not really lower value, it's 200 and 250,000, but in comparison to the 550 to 600 and 650,000, yes, it is. But these sort of properties are actually going for round about the home report value. St Michael's Church, 2-bedroom upper apartment, sold in 2 weeks. Again, another one, 6% over the home report value, which represented another £10,000 to the seller. 2-bedroom apartment went for 160,000 at the St Michael's Church, the conversion that we sold a couple of years back, all out. So beautiful property inside. Went to a first-time buyer, delighted to get their first foot on the property ladder. We like first-time buyers. Okay, so this is what we're going to talk about, UK statistics. Let me go over this and talk about UK statistics. Just grab my bearings and what I'm looking for. Here we go. UK stats, compiled by my good friend, Chris Watkin. Let's look at some of the UK stats here. It tells us where the health of the housing market is for UK wise, because UK has an impact on us. So we look at this now and again every single week. Chris looks at this for us and he gives us information. So you can see the pink line there, that is 2023 in comparison to 17, 18 and 19 and where we are right now in the first 31 weeks of the year. And you can see it's almost the same, like for like. Exactly. The number of weekly listens. So there's no huge oversupply. There's same every single week, week in, week out. It's similar to all the previous years. Let's look at the gross weekly sales agreed in comparison to each other when we look at that. So you look at the thick pink line in comparison, it looks similar to all the other years, and it looks nice and stable when it comes into the week 30 itself. You can see in the pandemic and 2017 how this went up significantly. I'm not really sure what happened in 2017 at that point in time. Week 30, not really sure. But if you look at 2018, 2019, and 2023 and compare them, it's almost similar. Now, we've not got 2020 and 21 in there because it skews the figures a bit because they were like boom times. And we're actually looking to try and see if we can smooth that out and see where it is in comparison to the 2019 and before. The reason for that is 2019 before was still a healthy market. So what we think, this is where we're back at about the 2019 health-wise in terms of the, not in terms of the economies are probably a lot better than it was in 2019. But in terms of the housing market, it's kind of similar. So this is why we're comparing it to see where we are in terms of these years overall. Let's pop into the net residential net sales 2017 to 2023. This is, see the 2020 and 2021. It just skewed everything right out. There's the boom with the big green there, all up. And then there's this huge drop in 2020. That's why we included them to see where it was. So if you strip them out and then you include them, it just makes the graph look, it kind of looks meaningless. But if you compare it to the other years, again, as I said there, we're slightly under. We're under just by about, I think we're running around about point, I think we've got it on the next one. Yeah, we're sitting at 92.3%. Of 17, 18 and 19, 2017, 18 and 19 average. So we're sitting at 92% of that. So still healthy in comparison to these years overall over the first 30 weeks. Sale fall throughs. This is actually quite an interesting one throughout the UK. Now, while we don't have a lot of sale fall throughs in Scotland, it does happen quite a lot in England. Predominantly we don't personally. We have sale fall throughs, but we make sure we've got somebody else lined up just to step in their place. So it never really gets registered as a sale fall through anywhere, and because somebody else just steps in their place and we're just going with someone else. Because kind of that's how the strategy that we use to make sure we've always got somebody in reserve for that purpose. But if you look in comparison to the July last year, it's almost in terms of September, it's almost similar, and it's actually dropped and to round about where it was for July last year. So it's coming back down and stabilised. Now the sales fall throughs in there in Christmas in comparison, that's a one-off because of the drop in the number of, because it's a percentage of the actual sales on the market, and it's a lot higher because there's less properties on the market at the Christmas period. And that's why it's like that. So that could explain that. So let me just summarise what the potential is here. The key statistics, UK property market from 24th of July to the 30th of July, inclusive. New property market listings, 32,000 for the week. The 2023 running weekly average is 33,000. So new property listings was a bit less that week than it was on the average, which is a restriction in supply. Average listing price 417,000, running average 433,000. Price reductions 21,600, whereas the average is 19,300, so a bit higher in price reductions. Average asking price for properties being reduced 404,000. The running weekly average 407. Number of properties sold, gross sales, in other words, throughout the UK in that week was 21,400. Running weekly average is 22,200, so not far off. Average asking price for these properties that are sold in the week was 354,000. The running weekly total is 359,000, so it's a bit less than the average asking price. Sale fall throughs 5,952. Running weekly average 5,338. So the sale fall through rate, very important start. This is. The number of sale fall throughs expected as a percentage of the week's gross sales is 27.76%. The overall average for last month is 29.31%. The running weekly average is 24.68%. So the net sales this week is 15,488. The running weekly average is 16,917. Year-to-date net sales 508,000 compared to 625,000 in 2022. So a bit less sales in comparison to what it was, but as I said in that graph before, it actually shown you there the net sales was 92.3% of the running average from the previous years. So pretty healthy, I would say, pretty healthy in terms of the housing market, in terms of where we are, in terms of overall. Finally, let me just finish off. If you need any advice, please feel free to contact us. Please feel free to ask questions as well. More than happy to answer questions. I'm just about, there's a couple of questions on Instagram. I'll pick these up just at the end of this, so Instagrammers, hold on. Okay, wealth creation shows the last thing Richard and I are going to talk about tomorrow. Well, not the last thing, but the last thing I'm going to talk about. But we're going to do this tomorrow. How would you like to know how to be successful in life? Well, if you find out, tell me. No, we're going to talk about this tomorrow. So far, how's success defined? We're going to talk about that and the ability to reach your goals in life, whatever goals they may be. Now, again, this is all based on my personal experience. You don't need to go back to school or anything like that. It's purely the fact it's based on my personal experience of how I've achieved what I've achieved so far. There may not be a perfect combination of ingredients that will guarantee your success. Still, there are some basic steps you can follow that can improve your chances of being successful in life, love, work, and whatever happens to be important to you personally. So how's success defined? How can you achieve it? Well, as I said, luckily, you don't need to go back to school for this to understand, as Richard and myself is on hand to discuss this tomorrow in the Wealth Creation Show. We're going to be covering subjects like, how do you build a growth mindset? Now, that's a snooze fest to most people when you hear that. But really, what we're doing in basic layman's terms is we're actually teaching you or showing you the things that you should do to ultimately improve your wealth, improve everything that you do, and actually generate more income for yourself to probably have a better quality of lifestyle and possibly be able to focus on the things that you should be focusing on without getting distracted by the things like the shiny penny. And I'm back. See how I got distracted there? So it's all about improving your emotional intelligence, strengthening your willpower. It's a big, big thing. Do you know the big shot only became a big shot because they kept on shooting? The wee shot kept on shooting. That's how they end up becoming a big shot. The ordinary person becomes an extraordinary person only purely because they keep doing that wee bit extra, which goes on to extra to ordinary, extraordinary. That's the only reason that happens. The person that hangs around long enough and keeps doing something consistently all the time is the person that ultimately succeeds. The only person that doesn't succeed is the person that actually gives up and quits. That's it. You always succeed. You're guaranteed every single time. It's just when that's going to happen. So this is all about having faith. So we're going to talk about that tomorrow as well, and focusing on intrinsic motivations, setting achievable goals. You know, things that it's like people don't identify with goals. Some people identify with things like targets, dreams, aspirations. What do you want to have when do you want to have children? Do you want to have a better lifestyle? Do you want to have a better job? Do you want to have an extra holiday a year? Do you want to drive that car you've always wanted? Do you want to have a bigger house? Do you want to move to a different area? These are all things that can actually be achievable goals. And it's kind of like climbing a mountain. When you get to the first part of the mountain, you kind of think, I'm near the top. You get over that wee summit and you go, oh, Jesus, another hill to climb. And then you get over that and then you get to that hill and then you look up again and you go, oh, Jesus, another hill to climb. But it's understanding life is like a journey. It's not a destination for success. Success isn't a destination. You don't just arrive at success. You never arrive at it. You just get better at it. And this is what we're going to talk about tomorrow. And nature traits linked to the nurture and nature traits that are linked to high potential people, which will actually give you a really great insight and be able to put you into that zone. Because if you don't have these traits right now, these intrinsic motivations, you can actually learn them. I learned them. You know, how does a guy who was asked to leave school when he was 16 years old and told he would never achieve anything, then get to where I am right now? Well, this is exactly what I've done over the years. It's just that we've managed to put it in a nice, wee, concise 1 hour show to tell everybody what it's all about. So it's all about, as well, cultivating strong social support, building teams, and primarily, one of the most important things, which I have a lot to learn on, and I will be able to impart a lot of information about, is how to avoid burnout. That's a biggie for me. Definitely. I'll certainly be able to tell you some lessons in that, how to avoid burnout. I've been there plenty of times. And that's it. Thanks very much for joining me, and listening. And if you've got any questions later on, or you've got any catch-up questions to do, or you want to message us direct, because you don't want to be able to put it on public, but you want to ask us something direct or myself direct, I will pick it up. I've got I've got everything on my phone all the time, so I get easy access to everything every single time. Until next time, guys, have a wonderful evening, and until next time, I'm Jim Parker for Fife Properties TV.